Hi, it's Greg Schnell, and I'm here with your Daily 5. So, the first thing that I think is interesting to kick off the month of June is that, or the month of July, is that the 30-year bond yield is breaking the 6-month uptrend. And really, this is when the stock market started to struggle, was when bond yields broke out roughly in the beginning of January and broke this little downtrend. That was one of the key places on the chart. Now we're at the other side of it, and we've had a big uptrend in momentum, and now we're making lower highs in momentum, and it looks like this is about to go negative. When this goes negative, I would expect us to get a pretty strong stock market response to the positive side. And we're also breaking the momentum uptrend in relative strength against the S&P 500. So if these long bond yields can start to roll over, that would help and give us a better opportunity to kind of be long this market. Second thing I'm looking for is a rotation back into some of the technology names. They've been beaten down because of the net present value that people were using for their calculations. As you raise the yield, then these become a higher hurdle rate, and they were being priced differently, or they had to adjust their prices down. So these stocks have been hard hit. This stock was $360 and went down to $120. And now we're sitting here with the stock making a higher low, and you can see this Keltner band has basically been friction the whole time. And now what we want to see here, obviously, is that this starts to turn and burn higher. The PPO momentum indicator made it above zero for the first time on this entire chart since the S&P 500 topped out in January. So I like what I'm seeing here in terms of trying to reverse, and it's always hard to pick these lows. So one of the things I would suggest is if you're trying to buy the market down here with a bit of a beaten up state to it, you're a little bit better off to pick a few different names. Some of them are going to work, some of them aren't going to work. But if you are putting money to work, then I would strongly recommend you don't kind of load up on one thing. Try and find some different areas. One of the areas I like is software. Another area is some of the computer devices industry group. What we see in there is the next chart I've got. But these software names have been really beaten down. And so at some point they do have a technology that's working, and we would hope that they could improve from there. And again, they make big moves. So the move to start July, this is after July 4th, so on the Tuesday, July 5th, we're up 7.17%. And again, it just kind of found friction here around the Keltner channel that's formed in green, and we want to see that move on up to the high side. This is the 100-period moving average, and we'll watch to see what happens when it gets up there. But I do like the fact that it's actually starting to turn and try to go higher. And again, PPO momentum indicator moving into positive territory for the first time this year. Looking in on Zoom Communications, this is from the Computer Devices Group. What you see here is a 4-month consolidation pattern starting in early March. And then we had the March sell-off where everything sold off. So this stock actually bottomed in May, not in June, and is holding up and is now making a series of higher lows and higher highs. I like that a lot. To me, that's exactly what we'd like to see. And also notice the 100-period moving average is now below the price. So we've moved above that and above my Keltner channel, and we've actually changed the direction of the Keltner channel from down to up. PPO momentum indicator moved up at the end of May into positive territory, but really it's jogged sideways while the index tried to find strength. So I like this as an entry because it's starting to work its way higher. And if we can continue to keep some positive momentum here and getting the shorts forced to cover, then all of a sudden what we could do is get a nice thrust in the market and see if we can get a rally started. Again, the NASDAQ was off 30% and the S&P was off 20%. So those are meaningful percent changes. It's been 6 months. Let's see if we can get a rally started and try to work forward from here. So I'd encourage you to go look at more ideas here, but I wanted to use these two examples in computer devices and software of areas to go look. Obviously, semiconductors is always one to look at. Those look really good. And I do think there's a case for the coming energy crisis this summer, especially in the utility companies that are providing those. Some of those charts look pretty good. And then the other thing, we're starting to see some areas like wind and solar starting to improve. This chart is a meaningful chart that I showed in my daily 5 the last time in June or in late May. And the point I'd like to make on this chart, this giant downtrend goes back to 1985. And briefly with the COVID surge, we kind of shot above it and then pulled back. But last month, we spent the whole month traveling above that line. And that was a concern for me when I identified this in May. And now here we sit up at this high level. So far on the Tuesday, we've closed here just right around the 105 level. But again, if we're breaking out to new highs here, this is a pretty important change on the chart. And for things that really have a US dollar problem, like commodities, this can be a more difficult area. So I want to highlight that, a high US dollar is a headwind even for technology companies selling their stuff overseas. So it doesn't mean we've got an easy backdrop here, but we might have an opportunity for a trading position to try and either eliminate some of the losses for 2022 or actually add on to some of the gains if you've rotated out of energy. So this downtrend line here is like a 5-year downtrend. It looks pretty small, but again, it's multiple years here. And as it starts to turn higher, that's the kind of thing that to me is saying the momentum is changing, and you want to be aware that the US dollar is in a big giant upthrust, especially on a long-term chart. And again, that is quarterly, so we've ended the quarter starting July 1 here. So this chart is a big picture. I don't want to get into it on a daily analysis, but the euro looks like it's breaking down, and all of that would add pressure for people migrating to the US dollar. And again, they've got a huge energy issue coming at them this fall, and we'll see if that ends up meaning more rotation into the US dollar. The last chart I want to point out is the CRB monthly. And what is it about this chart? Well, we got an outside bar to end the month of June, and while that doesn't seem that significant, all of the black arrows show when the CRB has an outside bar in a negative chart. So in other words, it was in an uptrend, it gets the outside bar, and then it starts to drop. And I think this does a pretty good job of highlighting how important this is. So it's dropping here, dropping here, dropping here. Like, there's none of these that look very good to me. And so this outside bar is a real big warning for people trying to stay long commodities. So I'd encourage you to be careful if you're in the commodity related trades. And on Tuesday, we saw some of the energy names sell off 10% or more, and crude oil really got hit. So to me, that part of the market really looks hazardous, and it might be better to look elsewhere. And I think some of those opportunities I pointed out earlier. So if you like the type of work we're showing you here, feel free to head on over to ospreystrategic.org. We've got a whole bunch of award-winning analysis there. But the weekly newsletter and weekly video try to keep you on the right side of the market. We always post daily setups, 5 different charts per day that we think are some of the nicest setups out there. And the strength index that we've created was down at 0 and is starting to improve up to 25%. I like that. I'd like to see it obviously really get roaring up into the high 70s. We're not there yet. But feel free to go over to the website, and it's only $860 for an annual subscription. And if there's something else you're interested in there, there's some other options. So with that, thank you for taking the time to join me. Good luck with your Daily 5. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.